Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Heldt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Welcome back to the podcast. Today, our guest is Taylor Jessee, who's an investment advisor and the director of financial planning at Taylor Hoffman. Welcome, Taylor.
Hi, Gary. Thanks for having me.
So tell us some about yourself. How did you didn't go straight into finance out of college. You kind of, went the good guy route, went accounting first, but tell us about that.
Yeah. So like you mentioned, I didn't originally start out in finance. I went to Baylor University down in Texas and I studied accounting. So, I was on that track. I got my CPA. I worked for a Big Four accounting firm straight out of college in the audit department. So pretty much nothing to do with personal finance. And I mean, working in public accounting, it was a great job. It was a great first job out of college. But I knew pretty early on that it wasn't the right job for me.
Mm-hmm.
I just wasn't passionate about it. And really, I just kind of stumbled upon, personal finance as a career track. I never really thought about it in school. Didn't even really know it was a thing, to be honest. So at the time, I'm basically a year into working at the Big Four accounting firm, and I know it's not for me. So I start to work with a headhunter, an accounting, finance headhunter, and just by, kind of dumb luck, honestly, there was an opening for, the title was Client Advisory Associate for a multifamily office investment firm in Dallas, Texas.
Okay.
So I looked more into it, seemed like a really good fit. It helped that I have a lot of family in the finance industry, so they were able to kind of coach me up and, give me the inside scoop on what that career path looks like. And I guess, so for those who don't know, a multifamily office is, it's a financial planning firm for ultra high net worth clients. With this particular firm, the minimum account size was, I think, $10 million. So it's basically financial planning for ultra high net worth clientele. So very exclusive, very hands-on. Of course, this being I was a year out of college, brand new to personal finance. So I wasn't, straight out of the gate, I wasn't like hobnobbing, with $10 million clients.
Right.
They wouldn't trust me enough at that point, and I wouldn't trust myself enough at that point. So I was more behind the scenes, learning about these clients, doing some, more back office operational type services. After about a year or so, I was able to start sitting in on the client meetings and, getting more FaceTime with the clients, but still, mostly behind the scenes. So I worked there for 3 years. It was, is a great company. They really took good care of their employees and their clients, obviously. But again, after about 2 or 3 years, I kind of, still felt like, while I knew I wanted to be in the personal finance industry, I just didn't feel as passionate about, working with the ultra high net worth clientele. Nothing against that at all.
Right.
I just didn't feel like my talents or, my passion was in that demographic. So getting that FaceTime though in front of clients really kind of sparked my interest in being a lead advisor, a lead financial advisor for really more like your average Joe, middle class type of person.
Mm-hmm.
The type of financial planning where you can really make like a tangible difference in people's lives. Again, not that you can't with, ultra high net worth clients, but it's just a different set of problems or a different type of planning, if you will. So that brought me to my next opportunity. becoming a, going on the financial advisor trainee course with a large, well-known Wall Street brokerage firm in Richmond, Virginia. So same industry as what I was doing before, but really kind of the exact opposite gig of what I was doing with the multifamily office. I mean, as a trainee, my job was really to bring on new clients, in the space that I think you would call the mass affluent space, so people with 200,000 to, 5 million in assets.
Right.
So I worked there for about 2.5 years. Ultimately, it felt more like a sales job, which, I knew that going in, and I thought I'd be good at it. But ultimately, it was kind of more of a glorified sales position, which that's kind of the dark side of a lot of the, big Wall Street firms is that advisors are mostly paid to sell. They might be working off of commissions. For sure they do financial planning, but it kind of seemed more like the end goal was to, sell something, as opposed to, spending time analyzing the numbers, doing the technical, tax, planning type analysis that I was mostly passionate about, so that leads me to where I'm at today, Taylor Hoffman here in Richmond, Virginia. And so kind of circling back up to the original question, how did I end up in finance? Really it was just a desire to make a difference in people's lives, which was harder to do in a sales or commission driven environment. It's not impossible, of course, there's good and bad advisors, with every firm, but it's just a different environment. It's more of like an eat what you kill, lone wolf type environment, which is the total opposite of what it is here at Taylor Hoffman. So, I don't have to worry about, feeding my family, putting food on the table, whether or not I'm bringing in new clients or, selling something. So I have the opportunity to really do what I love doing, which is building relationships with people, learning what makes them tick, what makes their families tick, and, spending a lot of time doing deep dives into the numbers, looking at taxes, looking, really doing that, deep analysis that, really drives the financial planning experience. So those are the things I love doing.
Right. So, so in the finance side of things, you've kind of gotten, your teeth cut on some things that you didn't enjoy so much and so forth. In those experiences, what are some of the questions that you really wish that the clients would have asked, but they didn't?
Right. Yeah. And that's a tough one, to be honest, Gary. With brand new clients, I really try to make it clear that I'm an open book and I'll answer any questions that they have. I think a lot of it goes back to personality. I think I like to think of myself as pretty laid back, and I think naturally you kind of attract people that are like you. So kind of naturally I'm attracting more laid back type clients. And I think when you have that type of rapport with people where it's not, all stuffy and, sterile, I think they feel more comfortable asking you questions that are on their mind and knowing that it's an open and safe environment. They might be more hesitant to ask questions that they feel like, there's going to be some kind of like negative consequence or that I'd be judging them for asking. So I can't, it's hard to say for sure what, a question I wish people would ask me is. I can tell you for a fact that like across the industry, the question I wish people would ask more, just kind of broadly as a whole, is about fees.
Right.
It's really surprising. I mean, we're really upfront with our fees. It's on the, it's on the homepage of our website. It's right out there in the open. We don't try to hide it. It's just surprising, this day and age, how many people come to us, if they're already working with an advisor, how many people come to us and they really have no idea what they're paying. Sometimes they think it's free, but, as we know, nothing in life is free. So
you pay
that's
what you
the
get,
question,
right? You pay for what you get.
Yeah, exactly. So really, I would say, ask your advisor about fees. If if they kind of struggle to answer, or they give you a really convoluted or confusing answer, usually that's not a great sign. But yeah, I would say fees for sure is, people are more conscious about it these days, but still be sure to ask that question.
Right. And going through, because you did have the experience with the ultra high net worth, but then you also had the experience with, just kind of beating the streets type thing to get new clients. You know a lot more now. So what is it that you know now that you wish you knew when you first got into the finance side of things?
Yeah, for sure. The main thing I wish I knew is that you don't have to know everything. And most people don't expect you to know everything. But in the beginning of my career in the finance space, I felt like I had to know the answer to every question, that would come up.
Right.
And really, because I was kind of, it was kind of like getting in your own head, and you feel like you're going to be exposed as like a phony if someone asks you a question and you don't have the answer to it, especially being younger.
Right.
And a lot of the prospects, a lot of the people you're talking to, trying to get them to become clients, they might have kids or grandkids that are the same age as you, if you're in your 20s or 30s. So, flash forward now, I've been in the industry for about 8 years. So I feel like I know my limitations a little bit better. I'm more comfortable telling someone, hey, I don't know the answer right now off the top of my head, but let me look into it and get back to you. I think that goes over a lot better than you're trying to come up with something on the fly and it being totally wrong, and then you have to go back and correct yourself. So yeah, just realizing that you don't have to know everything.
Right. Right. I think that's really important. I mean, especially, you came up through accounting first, and yes, a lot of that is kind of cut and dry, but you can't have everything memorized. It's impossible.
Yeah.
But there's always the, hey, I'm not sure about that, but I can get back to you and let you know.
Yeah, exactly.
I think that's important for our listeners to understand also, is that if they do go to somebody and this person seems to always have the answer, is it always, the right answer is the question.
Right.
So, it's nothing wrong with not, knowing everything.
Right.
So what are some of the common mistakes that you're seeing people make when it comes to, investing or, divesting that's going on right now?
Yeah. Probably the biggest one that I'm seeing these days is, a lot of people, and this is a good problem to have, but a lot of people are just kind of sitting on stockpiles of cash, either in a savings account or, a money market, which obviously these days, really not earning much of anything. I mean, like fractions of a penny on the dollar in interest. So again, I mean, it's a good problem to have for most people, given everything that's happened in the past year. But over the long term, it could still be a mistake nonetheless. And I'm really talking like younger people, in their late 30s, early 40s, who are sitting on, more cash than they would need. As a rule of thumb, from a financial planning perspective, we usually tell people to keep at least 6 months worth of their basic, worth of their living expenses in the bank to cover emergencies. Your car breaks down or there's a medical bill, any kind of uncertainty. And then if you're
COVID.
Yeah, COVID, exactly. If you're planning for a major expense, in the near term, like buying a new house, new car, you most likely should keep that in the bank too, near term being, within the next 2 to 3 years, maybe even the next 5 years, just depending on the situation and what it is. But I mean, once you have those things covered, why wouldn't you want that invested in the stock market where your potential return, and, emphasis on the word potential, because with the stock market, I mean, there's going to be ups and downs.
Right.
That's just the nature of the beast. But your potential return is substantially greater than, leaving it in a bank account earning next to nothing.
Right. So, kind of taking a step back, as you're talking about, I'm going to say younger investors, even let's take it back even a little bit further than that and saying somebody in their early 20s. I mean, can you talk on how important it is that, okay, I'm fresh out of college and I'm starting my first job and starting to put money away at that point in time, so later on, just, the simple compounding of interest, what that will do for somebody if they start early.
Yeah. And it's really interesting. We come across that scenario pretty frequently. And really what I tell those people is, I mean, the greatest asset that you have at your disposal when you're straight out of college, in your 20s, is the gift of time. Because if you're talking about saving for retirement in a 401k or in an IRA, I mean, this is money that you're, most likely, or, best case scenario, you're not going to touch that money for another 30, 40, maybe 50 years until you actually retire. So just having that money invested, setting it up on autopilot, basically, through 401k, through payroll deductions into your 401k, or, auto deposits into an IRA, just realizing that you have the benefit of time that folks, who are in their 50s or 60s, it's not uncommon to, when we're sitting down having planning discussions with people, in their 50s or 60s, they come back and they're like, oh man, I wish I could go back in time and, tell myself to save more. There's really no secret. It's really just you have that benefit of time. So, take advantage of the compounding interest, just get started with whatever little bit you can.
Yeah, I try to with my clients, I try to have them have their kids talk to me when they, as soon as they graduate. So they get that first job and we get them to start, and I tell them, it's like, look, even if it's $50 a month, you start there and, here, let's look at your tax withholdings to make sure that by the end of the year, you're not going to have a big tax bill, or that you're not getting $5,000-$6,000 back in tax refunds. Because to me, let me use that money during the year. I don't want to give Uncle Sam an interest-free loan. Let me have that money work for me, type thing. And that's what we really try to do with people. And then tell them, it's like, okay, well, when you get that next raise, it's like, okay, you got to take a percent of that because you're not used to that money anyway. So take a piece of that, let's invest that, and then, keep going, and you still keep putting more money in your pocket. And I just find, it's, there are still some people that are working that have pensions and things like that, but most people don't. We have no idea where Social Security is going to be. So with all of these things, you really need to save for yourself. And I think so many people aren't doing that. They're relying on the government or somebody else to, take care of them in retirement. And I think we're going to soon run into some big issues with that.
Definitely.
So, going through COVID the past, whatever, year and a half now, what are some of the things that you've had to pivot and change because of it?
Yeah, I would say, I mean, kind of like everyone else, we're adjusting to less, in-person meetings and going more virtual. I think that it's really been, if any good can come of, COVID, kind of the silver lining is, I think, we've noticed a lot of people are really comfortable doing, Zoom meetings, doing things virtually. A lot of our clients are, or a lot of my clients are, working professionals. They have jobs, they have kids. So it's not like they can just, pause everything. And let's say in a non-COVID world, it's pretty hard for them to come in for a meeting at 10 a.m. on a Tuesday. Whereas, I mean, how easy is it to schedule a Zoom, at the end of the day, or, at whatever time is convenient, during their lunch hour, whatever. So I think the big thing is just, been adjusting to, this industry has typically been a very, face-to-face, kind of hand-to-hand combat industry. So just adjusting to, society now where things are more virtual, So that for sure, that's been the biggest adjustment.
Yeah. I think that, because I know I've seen it, with my clients, is that a lot of them always thought, oh, well, I have to take a half a day off because if I'm at the office, I would have to leave early, so forth and so on. So we've been able to do that. And as compared to being on a teleconference, if we're doing Zoom, I can share my screen with you.
Yep.
Here's your tax return. You could do the same thing. Here's your portfolio. And instead of, drowning them in paper, they can see it, on the screen. And then you can certainly, give them a PDF of it.
Yeah,
and
for sure.
I think that's something that has really changed. And, I've been using Zoom even pre-COVID, with, people who aren't located here in Crofton, and I've been able to, and I've been doing their taxes for years. So we've been using Zoom for that. But, during this, we've done it more, and we're just now starting to go back to the in-person meeting.
In person.
But we're going to keep offering both, depending on what the clients want.
Yeah, same here. I mean, in my email signature, I have a link to my online calendar, like my Calendly, and Zoom is an option on there. So we started doing it with COVID, but I'm going to leave that as an option because I think a lot of people just really enjoy the convenience of it.
Yeah, I think, and it's funny, looking at like the restaurants and stuff, a lot of them used to have the curbside because of COVID. Now they're pulling that back, and it's just like, oh, well, man, that was just always kind of nice to be able to drive up and you carry this stuff out and I go, and they're changing it back. And I'm really wondering how that's going to, coming out of COVID, how this is really going to affect businesses also.
Right, for sure. It's funny how quickly people kind of adjust to, like the new normal, quote unquote, where I'm sure a lot of things that we're used to now, just being like more than a year into COVID, a lot of this stuff isn't going away, I'm sure, with virtual and that kind of thing. Yeah.
I think it really, again, everybody's kind of saying, oh, it's getting back to the way it used to be. It's like, well, I don't think we're ever going to get back that way. And
definitely not.
The businesses still need to be ready to pivot even more when it comes to dealing with, with their clients. I know that we like more holistic, where, we're working with the financial advisors, which is a big mistake that I see a lot of CPAs don't do. They're not working with the financial advisors. And it's almost like, you got these two entities in silos trying to do something. And I think it's very important for the listeners to understand. It's like, we need to work with you, with the estate attorneys and business attorneys and things like that, and then build that team. Because if we don't, what ends up happening is, you're thinking that the client's talking to us to make sure that they have the estimated taxes paid on their capital gains. It's like, hey, they don't. And there's a
there's a disconnect.
There's not that communication.
Yep.
Do you, going into that, I mean, how has the response been with your clients when you say, hey, let's bring your CPA in on this conversation? How receptive have the clients been with that?
The vast majority of them are very receptive. For better or for worse, a good number of our clients are, just kind of doing TurboTax. And actually, in the past 2 years, we've now offered tax preparation services for clients. So me being a CPA, and we also have another CPA on our team here, are offering tax prep services. Really it's more for like what used to be the do-it-yourself crowd. They're doing TurboTax. I mean, it's really just a W-2 and some investment income. But I would say as a whole, I mean, we definitely do take the team approach. Our clients with more complicated returns, I think, appreciate that we take the initiative to work with CPAs.
Right.
And I mean, it's really the conversation or the preface of it is, hey, we don't want to do anything on the investment side that's going to totally, blow up your tax situation.
Yeah.
So let's make sure everyone's on the same page.
Yeah, no, I agree. And I think that's so important for people to understand, you know, and I think so many people would think it's like, oh, well, you know, that means I'm going to get billed by you. I'm going to get billed by the CPA. I'm going to get billed by my attorney. And I think lots of times, you know, at least I tell my clients, it's like, look, you know, if we're not talking about, you know, if we're talking the 3 hour meeting that we're going to be in, yeah, I got to bill you because it's my time. But
Right.
if I'm getting on the phone with you and your investment advisor for a half hour or so, it's like, I'm not sending you another bill, you know, for that. I just think that that's part of us helping you with your, you know,
Right.
preparation of the tax returns. And I think that one of the things that the people miss is, and you guys do it, it's you do planning, you do
Mhm.
financial planning. And that's where I try to tell people there's a difference between tax preparation and tax planning. They're
For
not
sure.
one and the same. They're two totally different things.
Mhm.
And I think that that's important, you know, for people to understand also.
Yeah, for sure.
So we talked about a lot of stuff today. What question haven't I asked you that you wish that I had?
I would say, so, you know, why work with a financial advisor anyway? Um, it's not uncommon. I would say it's probably about 50-50 with new clients that come to us. You know, half of them have worked with an advisor or they are working with an advisor. And then the other half have never worked with an advisor. It's a lot more work to, I think, convince or, you know, explain the benefits of working with an advisor to someone that's never done it before.
Right.
Um, so, I mean, just kind of my high level spiel of the benefit of working with a financial professional is just, you know, having a trusted confidant, someone who's able to sift through all the noise and all the information that's out there. Because it's not, the problem nowadays isn't a lack of information. That was a problem in the 80s and 90s
Right.
where you pretty much had to go to a stockbroker in order to invest because they were basically the gatekeepers of all the information.
Right.
The problem now is that there's so much information available at our fingertips, but so, you know, how do you know that you're making the best decision or the right decision for you and your family? Because, you know, some random article on the internet or, you know, Wikipedia or whatever, they're not going to know your personal situation.
Right.
They're not going to know your tax situation, you know, your retirement lifestyle or needs. So just having that trusted confidant or that expert that's able to sift through all that noise.
Yeah. And again, it goes back to what we talked about earlier, planning.
Mm-hmm.
You got to do that. You know, I definitely think that you know, it's important to use a professional in anything that you do, because there is, I mean, you know, yes, there's the, you know, the robo advisors, yes, there's the, you know, big box stores, you know, tax preparers that, oh yeah, we're here type thing, but
Mm-hmm.
you need that sounding board. And lots of times, you know, you and I as a professional are talking people off the cliff.
Mm-hmm.
And if you're using one of these, you know, online things, you're not going to have that. And I think
Right.
that's always important to have somebody
Yeah.
to listen.
Yeah, like when you most need it, do you really want to call a 1-800 number and be on hold and then get bounced around to different people every time you call?
Right, right. I mean, it's definitely nice being able to talk to the same person every time, because then they do
They
understand
know
you
you.
a
Hmm.
lot more.
Hmm.
So Taylor, if those, you know, our listeners like what they're hearing, how can they get in touch with you?
Yeah. So there's a couple of different ways to get in touch with us. The first, obviously, is our website, taylorhoffman.com. Another avenue would be our investment team actually produces a daily stock market newsletter. It's called Market Bites. It's totally free. You can sign up online on our website. So that's a good way to, you know, get kind of a high level overview of what's happening in the market, what's happening in the economy, but at the same time, not, you know, having to sit down and read the Wall Street Journal, you know, front to back. You know,
Right.
we're kind of giving you the highlights, everything that you need to know. We're on all the social media outlets, you know, so Facebook, LinkedIn, even TikTok. If you have younger listeners, we got a TikTok page. And the last way, I think, is the most exciting way to, you know, kind of keep in touch with us that we're really excited about is we're actually building an iPhone app right now. It's called
Okay.
Avitas, and it's really meant to address what I think is one of the biggest problems in the finance industry is, that the people that need our help the most are often the ones that can least afford it or are given the least amount of attention from financial firms. So we're developing an iPhone app called Avitas, which is we're really trying to democratize access to investment professionals and financial professionals who, again, are typically being ignored by, kind of the big box stores, like you mentioned. So, young professionals, people in college, out of college. So the iPhone app, Avitas, is coming out later this year around, I'd say, fall of 2021. And it's great. You can open up an account with us in, 30 seconds on your phone. And then you have access to our proprietary investment ideas. So you have access, I think, to that high level touch all through the convenience of an iPhone app. So again, that's called Avitas. And I'll send you the link as well. So it's on our web page.
Yeah. That's great. That's pretty cool to be able to have something like that, for your clientele.
Yeah. And I mean, to us, it's a natural progression too, especially, I mean, COVID was kind of the impetus of, things are moving virtual. How do we stay in touch, or how do we connect with people? Because we've kind of already solved the problem here in Richmond, Virginia, meeting with people one-on-one and providing them with great, solid, personalized financial advice. But how do we expand that and really, expand on our mission to help people? And to us, an iPhone app was just a natural extension of helping people.
That's awesome. So, Taylor, I really appreciate your time today. I know our listeners are going to get a lot from this. Thank you. Today, our guest has been Taylor Jessee, investment advisor, who is the Director of Financial Planning with Taylor Hoffman. Thank you for your time.
Yeah, thanks, Gary. It's been a lot of fun. Appreciate it.
This show has been produced by Market Domination, LLC. To discover how you can have your own show completely done for you and turn it into a real published book and become the authority in your marketplace, go to www.marketdominationllc.com/podcast offer.